Good afternoon, everybody, and welcome back to the legendary Verified Investing channel with me, Drew Wolfer, your golden guide to everything that's happening in the metals markets. If this is your first time here, we'll give you a breakdown of what's going to happen on this show. This is called the Golden Nugget, and it happens every single Wednesday. Put it on your calendars at 12:30 p.m. Eastern Standard Time. We're going to break down what's happening in gold, not only from a technical perspective by going through the charts, and then we're going to go through the technicals on silver as well. But then we're going to talk about the things that are happening, the inflation data, the economic events, what central banks are doing, what's happening around the globe, trade tensions, things of that sort. We're going to have 3 to 4 special segments every single week, and we're just going to get directly into those right now. But the first thing that we have to do, we have to gauge gold. So let's get into the gold markets and see what is happening on the charts and talk about the trades that we were talking about last week, how they played out in both gold and silver. Spoiler alert, they went extremely well. And let's see if we can find some new trades for this week, shall we? So the first thing that we're going to do is go right over here to the gold chart. Okay. Now you'll notice we have chart is pretty simple. We have an FRVP, which is a fixed range volume profile. This is your value area low, your value area high, and your point of control. Outside under this value area low means that the asset is undervalued. Above this value area high, this orange line up here means that the asset is overvalued. And this yellow line in the middle is called the point of control. It is the equilibrium point. As you can see, we have a downtrend line that we have now broken and back tested as support. Now we are bouncing from it. Then we had a smaller micro uptrend line that we broke down from, and we're going to be using that as resistance. So it's going to be the opposite of what was happening here, where price was getting squeezed. Now price is almost like it's expanding. Okay. So as you can see, we are in a nice little uptrend. And what we were talking about last week was this bear flag. Now, why did we want to trade this bear flag? Not only because we hit the value area high and formed a bear flag, but secondarily, if you look at the RSI on this, okay, at that same exact time, all right, you can see a very clear bearish divergence where price is going up and the RSI is setting lower highs. Okay, so higher highs on price, lower highs on RSI. That is what is called a textbook bearish divergence, and that is where we entered and bang, took that down, and then it formed the bear flag. And once that bear flag broke, it took it all the way down to about 75 to 80% of the full measured move of that bear flag. So that was a great trade. Now, what I'm also seeing now, and I'm going to take my magnet tool off just really quick so that we can do this. But we do have another potential bear flag that's happening, right? But we have regained the point of control and we are setting higher lows, okay? And once we come up here and we take out the top of this upward trending line right here, as you can see, if we take that out, it's about 33.75. This whole bear flag is nullified. And honestly, it could be nullified right around here, okay? You break up above that, you've taken out the majority of the staff of this bear flag as it sits right now. I don't necessarily think that we are going to be seeing any downward movement in the interim because of that. Now, where could you be entering? Well, if you were paying attention last week, you know, if you come down here and you lose the point of control, you can enter on the back test of that point of control, right? And as you can see, we've kind of started getting up there to where we are setting this upward sloping trend channel. Okay, so we can show you what that channel looks like. As you can see, bam and bam. So you could enter down here by where the 50 moving average is, which is this blue line right here. I can zoom in a little bit for you. You could enter right here, especially if this 50 is intersecting the bottom end of this trend channel. Secondarily, you could enter once you get above this 200 moving average and you get a confirmation candle above it, which we have not gotten thus far, right? We tried to break above it here, no confirmation candle. Once you get above this, you're looking a lot better on gold, okay? Now, if you break down below the bottom end of this trend line and you come down here and test this point of control, this is where you could be thinking about entering shorts, okay? So that is essentially what is happening in the gold markets. But now I want to do what we call the silver snapshot. All right, so silver is in, you know, we'll just call it what it is. It's in a nice uptrend, okay? And we broke out from a bull flag, okay? And I'll show you what that bull flag looked like. and I'll give you what is also going to be the supports on this, all right? Because a lot of people may have already missed this move right here, okay? So as you can see, let's get this off of here just for a second. Okay. This is our bull flag. This is what we were talking about the other week, and bang, look what happened. All the way up, took about 80% of the measured move. We also have, and if you've been watching, you know what this is, but this is the Fibonacci from the ultimate high to the ultimate low right here, and then the 1.618 retrace is the target on that move, okay? So you can start taking profits here, right, at the top, near about the 75 to 80% of the measured move on this bull flag. But where is your resistance? Your resistance is going to be right up here at about $38.75, okay? At the top end of this upward sloping trend channel that is very well established all the way back to literally December of 2022, okay? So you're going to be running into resistance there on your long position. Now, secondarily, you're also going to be running into support here at a technical double top, right? So call this your double top. This would be a very good position to start thinking about getting into longs, especially if it intersects with the midline of this trend channel. Okay, this would be a very good support level. Now, obviously, we need to see other confirmations once we get there, and we probably won't get there until about next week. So I will let you know. Obviously, if you show up next week at 12:30 Eastern time for the Golden Nugget. Now, next thing that we want to do is we want to get into all of our special segments, all right? And I've got them all listed here. That way I can be cognizant of your time and respectful, most importantly, of your time. So this is what is called the commodity compass, and we're going to be focusing on CPI data. So you're probably wondering, why did gold get a bump and then it kind of came back and trickled back down, right? We went from literally about $3,326 all the way up to $3,360, and we were trying to break that $3,350 super critical resistance line, right? And then it just came right back down. Had a topping tail candle on the 1 hour chart, right? So you're probably wondering why that happened. Well, right now it's hovering right around $3,340. And we know $3,350 is that. It's almost like a make or break point for gold right now, okay? The reason why is because we had May's CPI data release, okay? This is inflation data, okay? So consumer price index. This showed slowing inflation, okay? And this obviously every single time affects the gold markets. It came in at a 0.1% rise, which was less than last month for May, okay? And then year over year core came in at 2.8%, all right? This beat the estimates of 2.9%, meaning that inflation is slowing. So that is why you kind of saw a bump in gold and why a lot of people would be like almost like bullish biased to gold right now. But that is why you saw that bump and then a subsequent kind of trickle back down, because although we still have inflation year over year at 2.8%, it did beat the estimates. Okay. So we still have a lot of inflation, but we are beating estimates. So it's kind of like a, up and down game right now with the gold markets. Now, I want to get into what is called the segment that is the knowledge bank, okay? And this is going to be metals mastery, all right? These are the things that I teach inside of the Golden Opportunity training, where I, in conjunction on the Verified Investing platform, teach people how to trade gold and show you how I have an 84% win rate, okay? And obviously I can't teach you everything on this channel, but I can definitely teach you inside of the Golden Opportunity that comes out literally, I think it's 10 days from now, maybe 11 days. Not next Monday, but the following Monday on Investor Day. And I believe that is the 23rd of June is when you can actually get in there and see how does Drew have an 84% win rate on gold. Okay. Now, patience is key in a lot of these markets, okay? Stick with your clarity, because today's tempered markets, they're going to call for tactical practice, okay? Why do I say that? So with gold consolidating after these sharp moves, you really need to make sure that the golden rule for this week, at least in my opinion, is going to be respect the pause. In these choppy markets, sometimes it is best to sit out and wait for your perfect opportunity, okay? Why is that happening? Well, because we're positioning for the CPI's volatility, okay? And the CPI's volatility had you go super long and then super short within 2 hours of each other. Okay. So when you see these choppy markets, make sure you're waiting for your confirmations. Think about the trade that we had last week where we were coming up into a bearish divergence, rejecting at the value area high, forming a bear flag, and then breaking the bear flag, and then taking that bear flag all the way down to the point of control. That is a good trade with a lot of different confluences. So rather than just scalping and intraday trading all of the time, wait for your perfect confirmations. And that is something that we teach inside of the Golden Opportunity. Patience is key, and understanding that high levels of confluence actually give you higher levels of probability that your trade is going to play out. Now, our next special segment is going to be the central bank watch. And you're going to like this one because this is also something that I teach as a major section inside of the fundamentals, the fundamental analysis section inside of the Golden Opportunity. We have in the driver's seat a BRICS nation. If you don't know what the BRICS are, Brazil, Russia, India, China, South Africa. They are the 5 nations that are trying to adopt gold as a pretty much central bank currency, okay? And they're the ones that are buying the most gold in the world, besides obviously what we knew last week was Poland, right? Poland just comes out of nowhere buying ridiculous amounts of gold. China's central bank increased its gold reserves for the 7th straight month in May, reinforcing its steady reserve building. And get this, central banks are on track for a 4th consecutive year of massive purchases, anywhere from 1,000 tons in total in just 2025 of gold, okay? This is a secular trend, which is reinforcing structural demand for gold, okay? So you have to think about these things. Is gold bullish or bearish biased? In this market, it's bullish biased. Why? Because these central banks, if they continue to buy in the amounts that they're buying now, it's going to continue moving upward. We have institutional pressure pushing up on gold all of the time. So long as we stay above like $3,150, gold is ultra bullish. It is in a gold bull super cycle right now. So take the BRICS nations into account almost more than you take other nations, right? Because the BRICS nations are the ones that are trying to buy the most gold and adopt gold as a backed currency. They're trying to back their currencies with it and become like a gold standard. Okay. Now, the other thing that we want to talk about is a special segment called the Golden Globe. Okay. And gold has actually overtaken the euro as a reserve asset. This is crazy. These are the fundamental things that you need to be taking into account. These are the things that I teach inside of the Golden Opportunity. So according to the ECB, gold now accounts for 20%. Okay, let that sink in. 20%, 1/5 of global central banks' reserves. Okay, surpassing the euro's 16% share in 2024. I can't tell you how much that means for upward pressure on the gold markets, okay? Rising geopolitical tensions, sanction concerns, and de-dollarization are also driving demand in gold. We obviously have the trade talks coming up in between the US and China, so look for moves whenever those trade talks commence and subsequently end. Okay. Now, I want you to understand what is going to be on the economic calendar before you see me again next Wednesday at 12:30 p.m. Eastern Standard Time for the Golden Nugget, like you show up every single week. Okay, so on Thursday, which is tomorrow, we just had CPI today, came out at 8:30. We know it kind of did what it did, right? We saw that. 8:30 a.m. We have the jobless claims, the weekly jobless claims, okay? They're expected to be 241,000, which is a slight slowdown from last week. So this would, hint at a stronger economy. Then we have at the same time PPI for May of 2025. Moody's baseline is 0.2% in the positive month over month, and core PPI at a positive, adding 0.3% year over year, okay? Now, PPI and jobless claims, this is key. It's early signals on underlying inflation and labor markets strength, okay? So this is going to tell you Is the economy strong? Are we creating new jobs? Things of that sort, right? Then on Friday, we have the consumer sentiment from Michigan. Okay, this is preliminary, but this is a key mood indicator for what our economy is doing. Okay, so the Michigan sentiment and retail data, it's going to give consumer confidence, and it can impact gold indirectly through spending and then also growth expectations. Now, 10 a.m. on Friday, both of these are on Friday, Michigan, and then we have in Canada the capacity utilization rate, which measures how fully Canadian industries are using their capacity. So how efficient are they, essentially? Not as big of a deal, but you kind of understand where I'm going. PPI, Michigan, the jobless claims, things of that sort, right? Pay attention for those. Then we have Empire State Manufacturing on June 16th, and then we have retail sales on June 17th, which hints at how good our economy is doing, okay? And then on Wednesday, you won't see me before this happens because I come on at 12:30, but at 8:30 Eastern, Federal Reserve decision. It's game time, baby, and the policy statement, okay? So the FOMC meets June 17th through the 18th, all right? They expect to hold their rates at a 4.25 to 4.5%, okay? With market attention on this statement, you got to be ready. You got to be ready, okay? Because if they cut rates, gold's going to go up. If they hold rates, gold could still potentially go up or capitulate. If they raise rates, gold could take a hit, okay? Now, we also have CPI for May at 8:30 a.m. That was today, okay? So just understand what came today and then what is coming in the coming weeks. And I will see you for the golden opportunity, hopefully here in a couple of weeks. And I will definitely see you next week at 12:30 Eastern Standard Time on the legendary Verified Investing channel. Drew Wolfer, again, your golden guide to everything in the metals markets. I will see you soon for the Golden Nugget next week. Everybody, have a wonderful day.